Well, have markets reached their top for the year? Our next guest says the answer to that question could very well be yes. Jim Frischling, NewOak Capital co-founder and president, joins me now for the hour on set. You think that was it? First quarter, we're out, we're done?
Well, I think the risk on trade for both the fourth quarter of last year and the first quarter of this year was definitely the right move, up about 11% respectively for both quarters. But we've had a very smooth run, and the May and kind of sell in May, go away was the, I guess, the play that proved right for in both the past 2 years. Last year, the S&P lost over 20% from May to early October. So I do.
And you're predicting that again?
And I am thinking that right now a pullback, which is natural, and it happens, especially when you have smooth runs like this, certainly would be warranted. But that said, we think that the number of folks that have missed this rally, particularly retail investors that have been in treasuries and other fixed income products, and again, all the hedge funds that basically have been negative on the stimulus that's been propping this up, we think there are people that would step in. So we are calling for a pullback, but not as deep as the one we just saw.
Let me ask you this. Part of your theory here is oil prices. Now, we're pulling back today. We're in the 103 range today, but you're saying that basically oil prices are telling you that's another reason to kind of be not so bullish on equities.
Again, looking for similarities over the last few years, we had spikes in oil between 15 and 20 cents a barrel in the first quarter of 10, in 11, and this year it's a little less than that, but still up in the quarter. Thinking again, it's another contributing factor to a pullback, but again, a more shallow one and one that we don't think will last as long as the previous years.
Are you worried about corporate profits? I mean, we're just finishing up earnings, although every day we get another report. RIM's going to be today, but are you worried about corporate profits at this point for the next quarter? Because this quarter wasn't so spectacular.
Not so spectacular, but again, we still feel that the central banks and the stimulus and the low interest rates does bode well for corporates. But then again, it comes down to which companies you're betting on. Can they use the cheap funding? And by the way, a lot of these big companies are getting very attractive funding and how they deploy the capital.
You don't think, Jim, I know we got to run, but you don't think, Jim, that the retail investor that you mentioned that's been staying on the sidelines, you don't think they're going to see this market run in the first quarter and they're not going to jump in? I don't think it's possible.
It certainly is possible, but I think, again, it's been a rally that has they've been left out behind. So again, if it falls back, watch for a step in, but they're not putting more money in at this point.
I think I know where they're putting their money, Jim, and it's my next story. We'll come back to you in just a moment because you know where they're putting their money. I know. It is time for the good, the bad, and the ugly. Joining me now, I've got Robert Gray standing by in the newsroom, Jim Frischling here with me in the studio, Phil Flynn at the CME, and Robert, you have got the good today. And with all the concerns about privacy on the web, Yahoo is set to launch a new Do Not Track button for users. So how does it work?
Yeah, that's right. It's supposed to be in place by summer here, Cheryl. And this follows, remember, the Federal Trade Commission's been telling people who are collecting data online that they need to add this, and they've really stepped it up this week. Now, Yahoo says it's been in the works since last year, and basically it's going to be a button on there. You can click on it, and you'll have the opportunity to go through and perhaps customize it. People you would be interested in or subjects you would be interested in hearing from, but will not be tracking your every move across different subs. And this is going to be roll it out globally, Cheryl, not just here in the U.S., according to the stories that we've been reading on the wires out there. But the FTC, again, saying that do not track buttons actually need to be on browsers by year's end as well. So you could be looking at Microsoft and Apple and everyone else having to add them as well.
Stock's down about 5% year to date, so maybe it'll help the stock. That would be nice, all those management changes at that company. All right, I've actually got the bad today, guys. In its annual report, JCPenney says its brand new strategy of everyday low prices is actually potentially going to hurt sales for some time. Now, the CEO, is Ron Johnson, just came over from Apple. He says there was no guarantee that this revamp is going to work. Now, Jim, who's sitting next to me, likes the stock, and I'm wondering why, because everyone's beating up on this company right now.
And I recognize the challenge of standing next to you after a CEO comes
I'm not
back.
beating up on it necessarily.
While others are beating up on the stock.
But I don't think this is good for him to say.
Except I tell you that I'm betting on Ron Johnson. And to a certain extent, I think he's embracing the fact that the consumer is far more informed and far more aware of the prices thanks to the internet, thanks to the apps, which one of your earlier guests mentioned. And he has built the strategies, an Apple alum who pioneered the Apple stores in the Genius Bar. And he basically believes that if you respect and treat the customer right, it will return. And I'm betting on him on this basis. So I recognize the market's against him right now. It will take a little time, but JCPenney is transforming. It's got its month-long pricing, I guess, marketing campaigns. It's got Ellen DeGeneres, and I'm a big fan of what they're doing right now.
I do like the commercials of Ellen DeGeneres. I will say that. I mean, the stock isn't, you can't exactly say you like the stock because it's, not been exactly performing well. But you're saying, hey, buy into it based on, I mean, again, Ellen DeGeneres, big name. They're fun.
And I think Ron Johnson comes out better on the other side after this thing transforms. influence.
Yeah, well, it's certainly been entertaining. Robert Gray, what do you think?
It has been entertaining. They're definitely making a big push, and they've got the signs in the subway here with the JCP, and yet they had the logo up there almost immediately upon his arrival and switching that over. So they're certainly giving it a fresh look. It's not your grandmother's pennies anymore, Cheryl.
Yeah, maybe not.
At least that's what they're hoping to convey. Whether or not it is or not, we'll have to find out down the road.
That's a good point. That's a good point. And like I said, Jim likes it. All right, Phil Flynn, you've got our ugly today. Nat gas prices, 10-year low, a new 10-year low. We're running out of room to store it. Supply data jumping again today. And this is ugly?
This is totally ugly. I'll tell you what, this is like watching a train wreck in slow motion. If you want to see what a train wreck looks like, look at the natural gas chart. This is a market that is in big trouble on the supply side. No, it's not ugly for the consumer. We're going to get a big boost from this. Thank gosh we have low natural gas prices so we can afford gasoline. But I'll tell you this, what's happening right now is that supplies are so full right now. That injection today puts us a whopping 58.6% above the 5-year average, and storage is well almost 60% full. What that means is that interruptible customers, what they are is people that in the winter can get cut off because they use a lot of gas. They buy extra gas this time of year, so they have it in case they get cut off in the winter, from the providers. Well, right now, the storage operators are saying, listen, we're worried about next winter. We don't have room to take this stuff. So they're turning customers away right now. This is a sign that this market could really get hit later in the year. And so unless we get a very hot summer or a cold winter, we're going to be wasting a lot of natural gas. We're just going to be burning it off.
Jim, real quick, contract cut in half over the last year, but a lot of the big major oil companies do want to go after the shale gas. That could be good for them.
Yeah. Well, absolutely.
Oh, go ahead, Phil.
No, I was going to say absolutely. I thought you were throwing that to me. But yeah, this is the thing. Right now, when you're drilling in shale, if you were drilling for gas, you wouldn't do it. The problem is that when they're drilling for oil, if oil's at $100 a barrel, they don't care if they give the gas away.
All right, Jim.
Again, I like oil. I believe it gets set plus or minus 100. When it picks up too much, the spigots get open and it finds its natural way back. I recognize the folks in the Middle East, particularly the Saudis, have a viewpoint of where it needs to be to actually calm all other needs, or rather, at least quell, I guess, some of the demands for the alternative. So I think they run this thing pretty well.
Wow. All right. Great perspective, guys. Thanks to all of you.